So, this is part two of our conversation on how to trade the markets, and we will segue from how to trade Bitcoin differently, which we did in part one. We're going to talk with Gabriella now on how to keep up with inflation using the commodities markets.
And this is where Gabby will come because the target for the investments that people were making with us is to have an extra layer of security, which comes from applying our risk management model and diversity strategy of the trading account. So besides Bitcoin, people may invest in many different things, and this is the next topic that Gabby will cover in what right now people can take most advantage of.
Good.
Exactly. So, like Jason was explaining in the beginning, it is very important that we understand that we are working with different people, and every person in those difficult times wish to have this kind of security where he's safe, where his investment is diversified. And I still remember when you asked me to check the soft commodity market due to the fact that all this money printing that happened in United States during the pandemic and how this is going to affect the market. So following what Jason was explaining as an additional method of diversification and profit from the recent economic events, we are going to present to our clients the soft commodities, or this is like we're calling it the modern way to secure their wealth. Now, I'm sure and I can practically bet with everyone that no matter what kind of clients we're dealing with, all of us, we are shopping, all of us, we're visiting local supermarkets. And everyone, at least from what I'm hearing, everyone has noticed that for the past 2 years, the market has changed significantly. Something that was costing, let's say, $10 yesterday, today we can find it on a price of 15. So compared to 2008, all of the economical indicators are pointing towards even more difficult times ahead of us. So obviously the first products to react are the ones with significant importance for the survival of the population. This is the food, or like we're calling it, the soft commodities. With all that was said, we are certain that using the methods that we are going to present, our clients can easily save their finances from inflation meltdown. I know it's scary to be said like this, but this is the fact. Now, a few of the main reasons that can point towards the food inflation. This is, first of all, like I've said earlier, that is the unlimited money printing. I'm sure that everyone is watching news, everyone is well aware. The amount of money that was printed between the first, the second, and third lockdown has reached a humongous amount of money. Of course, the COVID-19 effect over the global supply chains, the Ukraine-Russia conflict, the sanctions that the United States put over Russian import and export of goods, all of those things combined, it was practically impossible not to affect the global markets. You can imagine that for 2 years of lockdown and close to 4 months of war, because we are getting close to 4 months, the world has changed and most probably will never be the same. Now, the events that we're discussing above, all of the events that brought the food inflation, they have brought also consequences unseen before in the modern history of the world, okay? And here we just presented one of them, like the global supply shock, the Russian ban over the export of fertilizers that can practically cause less fruitful soil, the global food system meltdown, the farmers losing motivation to plant, all of those things, one after another, they're practically bringing the soft commodities to unseen levels. And I'm sure that everyone, again, that is shopping can agree with me. Now, what we have done, and we really hope that until now, all of our clients are going to understand that the global picture, it doesn't look good, all right? And every person should realize that diversification of the finances is vital for all of us. Just to visualize even more our words, here is how the market has reacted so far on the events. And here we have 5 of the most used grain products worldwide that has increased with minimum of 100% of their value. Of course, we have wheat with 187%, we have corn with 154%, sugar up with 129%, soybean up with 121, coffee up with 174%.
Gabby, just one example is I was, in the supermarket here just recently looking at buying a slab of bacon.
Mm-hmm.
And I looked at the price. I go, wow, that's like almost doubled. And I counted the number of slices in that package, and it came out to about $1 per slice of bacon. And I'm like, what? This is
Exactly.
crazy. This is crazy. So, while the world is suffering under this huge inflation, we have the opportunity to at least offset that, if we're investing in these things where the prices are going higher
Mm-hmm.
and generating some profit to at least try and deal with it. Anyway, go ahead.
Exactly. So obviously, I believe that it's clear for everyone that we cannot survive long on those prices. It's quite a rhetorical question, and I know, and I'm absolutely sure, like you're saying, that every person that once or twice visit the local supermarket in the past couple of days even can agree and see the differences. Now, one of the 4 most important factors that you mentioned is that by trading on those assets that obviously everyone is familiar with, we can practically help ourselves protect from inflation, simply because, yes, you cannot stop shopping, but at least you can make money from the very same products that anyhow you're going to pay for them, right?
Right.
Now, for the purpose, of course, of our presentation, what we have done, we started following the prices since the beginning of the second lockdown, since 2021. And you can practically see that this is the price of the corn. This is before the pandemic, middle of the pandemic. Obviously, the price was running on $484. And right now we can notice that obviously the price is already getting close to $794. This is doubling of the price. And it is absolutely visible that these assets, they are moving, they're not sitting still. The next one that we have also checked, again, the pre-pandemic levels, this is wheat. The price of the wheat was sitting on around $633 pre-pandemic level. And here we can see it on a price of almost $1,173. Again, almost 200% doubling. After that, the next product, and those are assets that we use on a daily basis. We can't exclude them, unfortunately, from our menu. Here we have the sugar price of $16 pre-pandemic levels, and after that, we are getting to close to $19. As you can see, every asset is rising steady together with the inflation levels. Everything, one by one, is filling the holes. Now, of course, what we have did and what I'm trying to present here, this is something that you are well familiar with. This is the trading results based on the same opportunities of one of our clients, so that we can practically show how the market has been following up those patterns and how it looks like in a representation of numbers, of course, because this is why we are here. So far, do you follow? Do you have questions?
Well, so this portfolio that we're looking at was started when the pandemic started?
Yes, it has started a little bit before the pandemic, and it has been developing during the pandemic. Obviously, some of the trades are having precise dates. When everything was opened, we were following not only the soft commodities, but we were following also different other assets, Bitcoin, etc.
Yeah. Okay.
Yeah, Mark, if you can recall, I've been sharing these charts with you way before the pandemic even. It was maybe no, sorry, not before the pandemic, but a year ago, I
Yeah.
guess. Yeah. So back then we discussed it with you for your personal account, and I'm pretty sure you have good results to show as well on your past trades on corn and on wheat, sugar as well in particular. The wheat, it's going already on 1 million of a profit. We have 499,000 of a profit on the gold. We have 576,000 profit on the corn and another position of 243,000 profit on the corn. The loss that we are experiencing currently, the pending negative that we have, is mainly on we have Ethereum and Ripple.
Yeah.
Yeah,
Uh-huh.
but yeah, more crypto. The rest of the things are running on a decent return.
Yeah.
And of course, it fluctuates, but you already know this. So we are
Yeah.
cashing in the profit. We are letting the pending negative to reverse and go to its
All right. But
profitable level as well.
what was the starting equity? What did the account start with? It was around 4 million, wasn't it? 4.5 million.
Yes, the four and 200,000, something like that. 4 million, call it.
Yeah. Okay. So it was up to 17 million, down to about what'd you say, 12, 13 right now. So it's 300% more or less in
Yeah, and materialized profit, but because the balance it's 12 million right now. So even
oh
in
yeah.
a condition where if you let's say just decide to cash your chips out, you close all of the trades that you're seeing right now, on these ones that are on negative, these ones that are on profit, the equity, it's 13 million. So it's, on the background of 4 million of an investment, 13 million of a balance, you make the calculation in percentage, how much is that
Yeah.
return in a year and couple of months already.
Yeah. Yeah. And that's the way to look at it is, this is longer term. You get the trends, you think in terms of months and years, and don't be looking for daily and monthly profits. That'll
Really is, because you can see when the trades are dated. These are the open dates here
yeah,
that you can see.
yeah,
So you
one.
can see when the trades are open.
Uh-huh. Yeah. Yeah. Some of them not too long,
Exactly.
Yeah.
December last year. Okay. Yeah, well, that's
Now,
impressive.
it is. And the important part that we want to emphasize onto is the fact that those kind of opportunities, not just that they're having a long period in which a person can take advantage. Of course, the timing is important and a person should be able to enter as soon as possible. However, those are the further profits expected based on the above mentioned movements. We have a further profitability for corn, for wheat, and for sugar. And this is only because we have chosen those three commodities as being the most proactive during those difficult times. Furthermore, different combination between different assets can be made. Like Jason explained, the most important thing on the market is diversity of the portfolio. This is why we are presenting this, so that our clients can practically decide for themselves how much money they wish to make, and of course, with our proper guidance to help them further.
Yeah,
Now,
that diversity is important because if you're totally invested in cryptos, well, right now cryptos are down compared to 6 months ago.
absolutely.
And so the diversification, I look at it as balance,
Exactly.
or
So this
ballast.
is exactly what the slide shows, and what the screen on the profit shows. Because one thing is right now down in one sector, we are on negative, but in the other sector, in soft commodities, we are well into positive. So the account is well balanced, and it's not dependent only from one instrument or one symbol.
Yeah.
group of assets. It's like the diversification that we follow is exactly because of this. So we can have the proper balance and the risk management to be really applied into the trading in such a way that even if something goes against you, the other thing to compensate for you, and to be always in the balance of things.
Yeah. And
Precisely.
the commodities are not quite so volatile as the cryptos are. So when crypto takes off, as it surely will, everything goes in cycles. All right, we're going through a bear cycle at the moment, and it'll come back. And when that's in the plus side, along with the commodities on the plus side, then you're really looking at some spectacular numbers.
Absolutely. This is why your idea to diversify between the soft commodities and the crypto was so genius, simply because if one cycle for one asset ends, the other one is immediately taking the course, and our clients, they simply catch all of the movements on the market without missing anything, something that of course with every other financial and banking institution cannot be accomplished, and I'm sure our clients will know that. Now, what I would like to just to summarize in conclusion, we wish to emphasize on the fact that every single day when our clients turn on their TVs or read their newspapers or simply listen to their radio, they're going to hear about all of those things, even the serious media. And here we have pulled out some important headlines from different medias. They're pointing towards and warning the people towards what we have been discussing so far. So I believe that our clients need to understand that the more the prices of the soft commodities are rising, the more they're going to need an alternative approach in the money making. Because traditionally, making, let's say, 0.0002% from the bank interest is no longer enough to cover the food inflation that is getting close to 25%. With all that we have said so far, we are going to be extremely happy to assist to all of our clients in a smart way of how they can invest, how they can beat the current economical situation and get out of the crisis as a winners, not as a victims.
Yeah, that's quite a difference. Being
exactly.
a victor or a victim.
Yes,
And
definitely.
yeah, not only interesting, but really it's critical in these days.
It is.
So, yeah, excellent information. Thank you guys for bringing that forward. I guess just to kind of wrap things up, it's great to have these insights to know that, at least for one who's in a position to be an investor, that, there are strategies to help deal with the situation that we're facing here in this world, which is quite critical. Not only can we hopefully survive these circumstances, but also possibly even thrive, as a result of it. So thank you very much. Any final comments from you guys?
I believe that the most important thing, like we said, is the timing, because what I know is that if something happened once, like it did with the war in the modern history and like the lockdown, it may never repeat again. So it is better for all of the people that are interested in those kind of opportunities that we present to step up, rather than just thinking that another way might come.
Taking advantage of the opportunities that you have right now. I always like to refer to this. If someone could have told you to buy Google when the price was $5 per share, would you buy it now, having an idea that where it is right now?
Yeah.
Of course that you will. So these things are now what is happening currently in our time is the soft commodity crisis, the energy crisis, because you can see where the price of oil is. You can see where the price of natural gas is standing today. You can see where the price of corn and all the soft commodities that we've listed stands. It's, if not on all-time high, it's near to all-time high, or it's about to go to an all-time high. So we have to take advantage of what it's obvious and and what is logical as we have it right now available for us. Surely the cycle will end. So that's what we want to seize from every aspect that we have. We want to cash in the most of it. So crypto right now is down. It's a wonderful opportunity to buy it as in the next 2, 3, 4, 5 years. It may be on 80,000. It may be on 100,000 in the price when we talk about Bitcoin. Right now, we will want to position ourselves while the price is low, so we can ride the wave and we can end up with a substantial amount of profit in the end of the ride. Meanwhile, before that, while we are waiting for this to happen in the next 3 to 5 years, we are capable of benefiting from soft commodities right now. That's what we want to conclude.
Amazing.
And as Gabby said, cycles are coming and going, but we want to catch all of them, whether it's up in the price or whether it's down in the price. These cycles are going to happen eventually, and the position and the timing is most important.
Well, they're crazy times, but they're exciting times. And, the thing is, opportunities sometimes only present themselves once every so often. So for those who are in a position to take advantage, I would strongly urge you to give that some consideration. We can have a private conversation on some of these things as it relates to your particular situation. And I just want to thank Jason and Gabby very much for your time and putting this together and sharing your insights with us. So
thank you. Thank you very much as well.
Yeah.
Thank you.
All right. So with that, we will wrap it up for now, and look forward to speaking with you folks who are viewing this on a one-on-one basis, as soon as the opportunity presents itself. All right. So thank you. Take care. God bless.